do not start a fund. Starting a fund can be the worst way to waste time and go around in circles and not close a deal. It only works for a special group and a special series of situations that have to be triggered. So you want to make sure you watch this video to the end so it can explain the nuances of when and when not you should launch a fund, or else you're going to waste years of time, 6 figures plus, and not get anything done. So when it comes to launching a fund, it's very, very critical that if you don't have experience and you don't have a team of people that have experience, then you're wasting your time. We had tons of people that, hey, they haven't done a deal in their life, and they want to launch a fund. So it can work in a very specific situation, but all these gurus online that tell you can launch a fund without spending any time getting experience, it's not true, because you'll simply see that really you need basically hundreds of thousands of dollars, or you need tons of experience. Because the secret and the thing and the way that people actually launch funds is if they have fix and flip real estate that they don't have the ability to acquire, because let's say you want to do fix and flip, you want to find a piece of real estate and then flip it. The thing with that is that you need to have the money ready to execute, because the deals go off the market so quickly. So some people want to have a fund so they can go and buy and sell real estate without missing the opportunity and without you depending on their own money. So they would have a fund to do that. The issue is when people go create a fund to acquire, let's say you want to make $100 million fund and you haven't done one deal, that is usually really rough, and you're not going to actually get value out of that. So the best way is, unless you've done several one-off deals, and when I say a one-off deal, you've done one deal at a time for a while. If you haven't done that, it will be better to focus on doing a one-off deal. So a syndication or a special purpose vehicle or a capital raise for one deal at a time. And then until you do many deals at a time, then it'll be easier. We had a fellow at Aola, he closed 2 car washes. He did a 44 units multifamily deal. But before all those deals, he was there looking for somebody to help him raise money for a fund. And we actually structured it for him. And then we saw, this is back in 2021, and we saw that the investors would only want to cherry pick one deal in his fund at a time and take complete control and ownership over it. And so a way around that was and is to pretty much just do one deal at a time. And now, after he's done 2 car wash acquisitions, he's doing a fund and getting commitments for his fund. So it just takes to focus on one deal at a time first before you go into a fund. Because and then another thing is, the types of investors that get into a fund are usually these small check investors, and these small check investors, because the thing is, an institutional investor or somebody that will help in a control acquisition, they usually go after one deal at a time. Even investment banks, there's an investment bank that we know that closed $30 billion last year in New York. They would only invest in one deal at a time, because another reason why is because the success fees are so much lower on a fund. Because if you take a success fee is the money that you make for helping somebody raise money. If you take the success fee from a fund, it's way lower, because if the success fee is too big, then it can hurt the returns that the limited partners in the fund make, the investors make in that fund. Because a fund is purely based on how much money it makes for the investors. Whereas a project, you have more wiggle room to play with the cash flow of the project before it gets to the fund level where you're managing multiple assets for people. So people that raise money for funds oftentimes have to depend on a smaller upfront fee, a portion of revenue from the general partner, and a trailer fee, which is the long-term fee that the investors make, which puts a lot of risk on the person raising money, because then they don't get their money right away after the deal closes, and then they have to depend on several contingencies and time before they actually get the money, which puts them in a dangerous position. And why do all that complexity when you can just find one-off deal that can close quicker and is easier? So that's why it's meant for only people that have experience and only people that are really good. And another reason why it's meant for those people with the small checks in this sense is because, not because it's better for them, but because sometimes if you manage somebody's money, you have to know more about managing money than the person who's getting their money managed. So why would somebody go to somebody who knows a lot about managing money, like a billionaire or a multi-billion-dollar fund or a multi-million-dollar private equity firm, and tell them that you take the money and multiply it by managing several assets, when that's exactly what they do, or they do something similar? So you have to really bring more value than they do for them to believe that you can manage your funds better by going into a fund or a fund of funds. So the way around that is to target people that are less experienced, that don't know about the opportunities that are around. So that's why a lot of these fix and flip funds, or these some first-time funds and things like that, that's why a lot of them, they go to doctors who are rich but busy and don't know about real estate, or people that don't know about real estate. So these are these small funds, and then they can work really well for that situation. That being said, nothing stops anybody from starting a fund. The only thing that stops somebody is the experience, the ability for them to say yes, and the difficulty that somebody has in getting a deal done. So you have to be really careful and make sure that when you're working on starting a fund, that you don't get into this cycle of like pushing something against a brick wall that people are saying no to over and over and over again. So that's why you have to make sure you get the experience, number one. And then number two, after you get the experience, then you get the right target market that sees the value in what you're doing and won't disrespect you by cherry picking the deals that you make and the deals that you do. And then the last thing is, just to frankly make sure that you're doing it at the right time. Because if you do it at the right time, then you're not going to waste tons of time and tons of money doing that. That being said, if you're somebody who wants to do a syndication, or a special purpose vehicle to acquire one business or one piece of real estate at a time, make sure you head to raises.com, because we can do a free consultation to see if it's something that fits in what you're looking for. But with this, I'll see you in the next video, and make sure you like and subscribe to spread the free sharing of this type of